this video what to expect on how to buy a home. A home is probably going to be one of the largest purchases and assets that you're going to make in your entire lifetime. The average person buys a home 3 to 5 times. Knowing this process is going to make it more efficient for you to make the right decisions for your family. Now, hiring a real estate agent and what real estate agent to hire is going to make the biggest difference on how much money you're going to save in purchasing that home. I have been a real estate agent for almost 9 years. I have helped dozens and dozens of people find their own home ownership. And I know what to do when it comes to understanding the ins and outs of deadlines, the financing, and knowing when to find the right home for you that fits the monthly mortgage within your budget, in your time frame, and in the locations that you want for your family. Coming up in this video, if you're new to my channel, please subscribe, click that link below and that bell for notifications. And until then, let's get into the video. There are 4 topics that we're going to be going over in this video. 1, understanding the financing of finding home ownership. 2, house hunting, knowing when to let go of things that you want in a home and when to fight for what you want. 3, the under contract, which is called the escrow phase, knowing what your deadlines are going to be and what to expect from this process. There are a ton of things can go wrong during the under contract phase, and it's a very emotional process. And 4, the closing table and when to expect what you should do after closing on your home, all in this video coming up. Number 1, preparing for home ownership. Preparing for home ownership should start literally 6 to 12 months before you decide to purchase a home. This is because you need to know what your income is going to be, what your budget's going to look like, what your debts need to be handled. All of this can be happening within the 6 to 12 months, plus forecasting what the market is at and knowing what type of home that you can afford. So getting in touch with a realtor and a lender is key first. That is something that I do with my clients as we sit down either virtually or physically and go over the finances. Now, if you don't want me to be involved in those finances, the lender definitely does need to be involved. I like to make sure I stay in close touch with the lender to knowing what your story is, how much money you make, what your debt is, what you can afford. I have to know those kind of things to know how to move forward. Because we're in such a fluid market, things can change when it comes to interest rates. So I need to be able to play around with the numbers to know if you can buy a home or not. I do not want to show you homes that you cannot afford. So it's important for me to be working really closely with the lender and finding that affordability for you. The second part of the finances is a down payment. Now, a down payment, you can find assisted loans through credit unions through a down payment assisted loan. It does make your interest rate go higher. Either way, someone's going to get their money. It's just a matter of how you want their money and how the bank wants their money. Your down payment assisted loans are going to be worked into the loan and giving you upfront cash. This was very popular back in 21 and 22 due to the COVID crisis. A ton of banks were giving first-time home buyer loans with no down payment assisted payments, which means you could buy a home with putting no money down. We've seen those kind of go away now that interest rates have gone higher. So you do need to be saving for a down payment. Now there's also the down payment, but there's also closing costs involved. So a down payment is typically between 3 to 5% of the purchase price of the home. So let's say you're buying a home for $500,000. So let's say you're going to be buying a home for $500,000. To get a 3% down on that loan, you're going to need $15,000. Now that is what is called a FHA loan, a Fannie Mac loan. Now, their requirements, as far as your debt requirements, your income requirements, there's going to be what's called a PMI, which is your insurance on the loan. Those are all numbers to consider when knowing what you're going to be able to qualify for. Now, I'm not a lender. This is not my expertise, but I am giving you a rough understanding of what this looks like. So if you wanted to put more money down, it's going to reflect the difference of your mortgage. Then we have interest rates that we play around with, right? We've been playing around between 5 and 7.5 right now. They've been kind of all over the place. And I know with a video that I have upcoming, the market is going to be looking at maybe lowering those interest rates, which are going to make a huge difference for purchasing a home. Here's the question that I get asked a lot is, when is the right time to buy a home? The right time is when you can afford. It really just depends on what line you want to stand in. Do you want to stand in the line where you have a high interest rate? Do you want to stand on the line where you have a high mortgage and purchase price? Not high mortgage, but high purchase price. Because you can't get a low price and low interest rate at the same time, especially as a first-time home buyer. Now, one thing to pay attention to is that when you are looking for a home, and let's say you're a first-time home buyer, you need to view this as a home that's going to get you to the next home. You need to view your first home as the ability to move the equity and the leverage into the next home. $15,000 is a lot of money to save for someone who has never bought a home. Once you buy that home, your equity will increase in that home, plus you're paying down your mortgage. So when you move to your next home, you could have upwards of $25,000, $50,000, $100,000 to be able to move that towards the down payment of the next home. So getting into the home is the hardest part, which is why they have the first time down payment assisted loans. Now they still do exist. You can find loans that actually help like populate rural areas where they have what's called a USDA loan. They have conventional loans that if you get 5% down, you actually don't have to pay the mortgage insurance. So there's a lot of little playing around and understanding your situation and what that's going to look like. When I meet with you, my goal is what mortgage can you afford? Looking at the average mortgage right now in Utah, we're looking at between $2,500 to $3,500 a month, depending on what type of house you buy. So make sure you factor that into your savings, that a home is going to cost you $2,500 upwards to $3,500 a month for your base average home here in Utah. Once you get pre-approved is a letter that I absolutely have to have that pre-approved letter before we go and look at any homes. This is because I don't want to ruin your expectations of what you can afford and show you homes that you can't afford. I have heard stories, I have had it happen myself, where people get the wrong information from a lender and they end up thinking they can afford more. But the reality of it is the lender didn't do their numbers properly, which is why working with someone who your realtor refers, so they've had experience with them, they've done plenty of deals with them, they know how to communicate with them. That relationship between me and my lender is key to making this process a successful one for you. So then we also know there's a new law that came in place that I also legally cannot show you any homes without a signed agreement. Signing an agreement with a real estate agent is going to give you the ability to say someone is legally representing me and I'm letting them represent me through this process. That is a benefit to you. Some people are saying this could be a bad thing for a buyer because you end up having to pay more, and if you come in, you could negotiate for a lower price. Statistically, across the board, you will save more money by using a real estate agent than if you went on your own. Upwards of $20,000 to $25,000 is what the statistic says. So make sure you understand that someone who's professional is on your side, wants to help you save that money, and is going to fight for your needs, but hiring the right realtor makes the world of a difference. Number 2, house hunting. Trying to find the right home that works for you. You've already done all of this work. You've been waiting 6 to 12 months to know when you can actually start looking for homes. Putting in that extra work towards the finances is going to make this spot exciting. Opening that first door and seeing the showings. Now, you might be disappointed when you open that door to realize what you can afford and what you can't afford, which is why bringing down the expectations of what you can afford is most important. My first home that I bought was a townhouse, and I bought it for investment purposes. I knew that I could get a better loan by living in that property for upwards of 2 years and then turning it into an investment. Then I leveraged that money to go buy another house. We can talk about that on another day. If you're interested in something like that, leave a comment below and I can dive into how to do that. But realize that when you walk into this home, view the home as an opportunity. An opportunity, 1, to create memories. We know this is an emotional process. Number 2, an opportunity to create equity to get to that dream house that you want to get to. And number 3, the potential that you have to making that property look and feel like your own space. When I walk into a home, I want to be able to find how I can put my prints and my markings on that home. I personally like older homes that I can remodel. Some people like the newer homes, that fresh new look. Whatever you want, we can begin to fight for it, but it all depends on your budget. So when you walk through that first showing, Don't have super high expectations, but look at the opportunities of that space, because it's a rough market right now, and we need to lower expectations of what that American dream looks like in buying a home. Now, things to pay attention to when you're looking at homes. I will walk you through all of these steps, especially if I'm there showing the home with you, making sure you're looking at the walls and the ceilings and the foundation and the roof and the appliances and the electro outlets and the AC units. There's so many different things to pay attention to that when you walk into that first home, you feel overwhelmed of what kind of furniture am I going to put in here. This is my job to guide you through that, to say, look, this room could fit a king size bed. Do you have a king size bed? Look, this room, you could put the Christmas tree in this corner. Or look in this kitchen, look at, imagine entertaining, you can see the TV right here, or you don't see your dishes from the front door. If we've had these conversations of what you're looking for in a home, I will continue to find the home that embraces those things that you need and that you want. Now, there's a lot of tools that I offer as a real estate agent when you're trying to search for a home. I offer apps. I offer the ability to look at the specs. I offer the ability to communicate with the agent before you even want to see the property. So hiring me is I can really save your time, save your efforts, and narrow it down to 1 to 10 houses. If you're looking at 10 houses, something's wrong. I say my sweet spot is between 1 to 7 houses at the most that you should be looking at until you know when you want to put an offer in. Putting an offer in is the next step. You and I have been working together long enough that I know the type of offer that we should put in. So with my expertise, I will come to you and I'll say, we can offer this, we can ask for a home warranty, we can come in and put this earnest money down. These are the deadlines we would be looking at. How is your job looking like this? Does this look like for school, hours and time, making sure they come to school, holidays, making sure that timeline all fits. If you need to sell a house, working through the navigations to making sure you're not homeless during this process, and fighting for what that offer is going to look like, okay? There's also opportunities and ways to maybe ask for some closing costs as a buyer, because not only do you have the down payment you have to pay for, you have closing costs, which is about 1% origination fee of the purchase price of the house. So you're looking around $5,000 for closing costs on something like this. So things to consider as well. You and I have been on the same page though. I know your numbers. I know what you're fighting for. I will tell you, based on the market value, based on your situation and your timeline and the seller's situation and their timeline, when would be the right opportunity to submit the offer and what the offer would look like. Again, this is my job. This is what I do. I thrive off this stuff. I understand it, which is why you hired me to legally represent you. Negotiating those offers is probably one of my favorite things to do. Negotiation is an art. It is something that is a skill set to be able to know how to do. I was raised by my father, who knew how to negotiate all day long. I'm really good at debating. I'm really good at getting that sweet spot and treating us all like humans in this situation. So when you have to negotiate a deal and you go back and forth through addendums or counter offers or whatever that might look like, I enjoy that. Yes, it's stressful, but I can handle that stress because that's the job that I chose to do. The last but not least is the escrow and the under contract phase. And obviously making an offer was a part of that, right? So under contract phase is paying attention to the deadlines. Now, if you are a seller in this situation, once you sign that agreement with the contract, which is called the real estate purchase contract, everything's kind of up to the buyer unless there's other terms written in your contracts on what to do. At that point, the buyer has deadlines they have to make. They have the seller's disclosure, which the sellers have to give a disclosure on everything they know about the property. Number 2, there's a due diligence deadline. It is up to you as a buyer to do your due diligence. Check out the neighborhood, check out the home, do an inspection, do a radon test, do a mold test, do a meth test. Do what you need to do to get your due diligence done on actually buying that home. The third one is the financing and appraisal deadline. If you have a loan that requires an appraisal, then you have to have an appraiser come out that you pay for out of pocket through lending, which can cost upward of $500. Again, talking about these numbers is a big deal, and I go through all of it when we sit down through a buyer's consultation. And the appraiser is going to come in and value the home based on the area, location, size, amenities, upgrades, the whole 9 yards. Once the appraiser gives that value to the lenders cannot increase the loan any more than what that appraiser came in at. So let's say you offered $500,000 on a home. Well, the appraisal came in at 540. We now either need to negotiate the purchase price, or you need to back out or bring cash to the table of the difference. The loan will not go any higher than what the appraisal says. Now, if the appraiser gives a value at 510, that is instant equity of cash in your pocket, and you do not need to let the seller know of that value. That is your information alone. You paid for that appraisal. Then there's a financing deadline. The financing deadline is getting the clear to close from the underwriter, from the lender, and the appraiser, all moving forward on the same page of all the documentations that we have, which means congratulations, you have cleared the line of saying you can afford this home, you're under contract, you've met your deadlines, let's move forward. The last phase is the closing and settlement. But in between that, there's what's called a closing disclosure deadline. Closing disclosures are called CDs, and CDs are a 3-day federal grace period to making sure you don't lose your job, that your income doesn't change, and that your debt doesn't change. So please do not run your credit on anything to get your debt to change. Don't go buy a car, don't go get a personal loan, don't open up a credit card, just wait. Because that 3 days grace period could literally make the whole deal fall through if we find out that you have child support you need to pay, you just got laid off, or you incurred a lien on a property that you need to pay it off, or past due taxes. Trust me, I've seen it all. I have seen it at the closing table where all of a sudden we weren't aware with another client and the whole deal will fall through. So it's really important to make sure you keep your clean slate during that closing disclosure phase. Then the last one is the settlement and deadline. Okay, the settlement and deadline has the ability to say, we're going to come and we're going to sign the documents, we're going to agree to the terms, and the money is going to be transferred. This is a big, exciting time, and I like to celebrate it with my clients and saying you made it this far. Now, an under contract phase is about 30 days. When there's a busier market, it might be around 45 days. You can extend it less or more depending on the lender. During COVID times, lenders were saying they could close deals in 15 days. Once you do a lot of that grunt work with the finances up front, it makes it a lot easier to sell and to go to closing on our deadline. Sometimes deadlines need to be extended. There's lots of different variances of things that can happen of negotiation through the inspection, negotiation through the appraisal, negotiation through the closing deadline. There's a lot of different things that I need to handle while going through that under contract and escrow phase with you. But at the closing table is the opportunity now to transfer keys once funding has been made and to be able to move into the property. Due to the agreement, we have an agreement on when you can move into that property, whether it's right on dot when the funding comes in, or whether it's 24 hours of possession, 78 hours of possession, it just depends. So making sure you know what you and your realtor are communicating about, and they're communicating about what is in your best interest in buying this home. And I work through all of that with you. I work through all of the deadlines with you, all the negotiations with you. If you think you can do this on your own, more power to you. I had to get an education. I have learned so much through trial and error in my experience to know how to handle conversations, to know how to negotiate and work through in fighting for your best interest as a buyer and an agent representation, and also if you're a seller. So make sure you're paying attention to who you hire. And if you are looking to hire me, I have a link below, an Calendly link. We can get connected through a VIA, or we can get connected through personal me. I've got my phone number down there. You can visit my other platforms on social media. Let's get in touch, see if we would work well together. And until then, I'll see you guys in my next video.